Hey, welcome to my channel. In this video, I wanted to show you some incredible tips and tricks that very successful investors use to make a lot more money from their investments. The first trick is called tax loss harvesting. Now what this means is that every time you sell stock or you get a dividend from a company, you have to pay taxes on that by tax season. Now there's a cool trick to avoid paying as much taxes, and what you do is as follows. Let's say you have some stocks in your portfolio that have been doing not so well recently and they're in a loss, you're losing money from them. So when you sell those stocks, or when you have a loss of a certain amount of money from a certain company, for example, let's say you sold Tesla recently for a loss, you can use those losses to put on your taxes and to negate the gains you made from other stocks. So for example, if you made a profit of $1,000 from your stocks, and then you also made a loss of $400 from a different set of stocks, you can use that $400 loss to offset some of the taxes that you would make on the $1,000. So you made a $1,000 profit, you made a $400 loss, and you can use those together to make sure you don't have to pay any taxes on that $1,000 gain. So especially if you don't believe in a company anymore, or you want to sell your stocks and you want to get out of a position you're not interested in being in anymore, this is an incredible trick because it means that you can use your losses to actually pay less on your gains. So it's an incredible trick. Try it out yourself. If you have any questions about that, just message me down below and we'll talk about it. Now this next trick is so exciting. I absolutely love this trick so much. And one of my friends taught me it a while back and I'm so grateful for it because it's such an awesome trick to figure out how long you should expect your money to take before it doubles. So for example, let's say you put $1,000 into the Vanguard S&P 500 ETF. It's one of my favorite ETFs to invest in and the ticker is VOO. So I put $1,000 into there and I want to know how long will it take before my $1,000 turns into $2,000. So there's a really cool trick. All you have to do is divide the expected average rate of return. So for example, annually, the S&P 500 rises by about 8%. So I do 72 divided by 8 and I get 9. And that tells me that because I invested $1,000 and it rises around 8% a year, I should expect in around 9 or 10 years, my money will double in the S&P 500. And so when you use this, you can figure out exactly how long it will take on average to rise. And even though it may not be exact, it means that over time, your rates will be pretty close and you have an idea of how much money you can expect in the future. This next advice is so important if you want to make sure you're successful in the long run from investing, and that is make sure that you reinvest dividends. I know it's tempting to want to take the dividends that you make from the stock market and spend it. However, if you want to be successful in the long run and you want your portfolio to grow exponentially, it is super important to make sure that you reinvest all the money you got from the stock market in the short term. This is because in the long run, every dollar that you invest now is going to be worth a lot more later. And as long as you have a job and you're able to survive, not living off of dividends is so important. You want to make sure you put all of the money you got from the stock market back into the stock market so you can continue to make more and more money. So when the stock market pays you a dividend, put it right back in and you'll make even more later. The next trick is extremely important, especially if you're investing a lot and for a long period of time, because basically brokerages will cost you a certain amount of fees for buying their stock. So for example, some brokerages don't have any fees, but some brokerages will charge you a certain amount of money every month or every quarter, or even every single time you buy and sell a stock. And that money will add up because over time, let's say it's only a fee of less than 1%, but if your money is growing exponentially and you're constantly paying fees, that is going to take out a lot of money from your pockets over the long run. So make sure that you go for a brokerage that has either no fees at all like Webull, or for a brokerage that maybe doesn't have fees but still makes you pay a little bit extra. So for example, Robinhood will make you pay a little extra. They'll sell your data to someone and then that person will sell you a stock a little more expensive. So it is still a little bit extra fees, but it's not as bad as paying a fee every single time you buy a stock. So make sure you understand your fees. This is especially true if you have pretty high fees, because then every time you're buying and selling a stock, you're also paying fees and you're lowering the amount of money you're making. This is another reason why day trading is not a good idea. So make sure you understand your fees, you understand exactly what your brokerages are making from you. And then once you get an idea of that, you'll understand how much more money you're going to be making by not paying fees. This next trick means taking advantage of the offers and promotions available to you so you can get free goodies and free money. I've done this a lot by signing up for Robinhood and getting free stocks, signing up for Webull, getting free stocks, which one of them was worth $40. And then from there, because of that, I sold the stocks, or I kept the stocks if I valued them. I had extra money in my pocket. So instead of just depositing $100, I now had $180, which I could then also just use that. And then I had free money. So definitely taking advantage of promotions and offers from brokerages is a good way to make a little extra money if you're anyways interested in investing. And that way, once you start investing, let's say with 100, you now have a little extra money involved with it for free. And so this is cool. It also offsets some fees or whatever else you might be worrying about. So this is a really good offer. If you see an offer like, for example, 3 free stocks or 4 free stocks from a brokerage, then this is definitely a good opportunity to take it, even if the stocks are not worth that much. It's free money with almost no effort. So it's a good idea to try to take advantage of promotions and offers. This also applies to credit cards. Sometimes if you sign up for a credit card, you don't even have to use it that much, and you get extra money and extra cash back and deals. That obviously depends on your credit score, but taking advantage of promotions is a really cool way to make a little extra money just by a little bit of effort, and I love doing it. So if you're interested, you can also look below. I have a current promotion going on. You get 2 free stocks by signing up for Webull. It's up to you if you don't have Webull already, so that's definitely one option you have. With that said, you guys, I do have a lot more tips and tricks here listed, about 30 more, but I didn't want to put them all in a video. I'm still a little bit too inexperienced to be making super crazy long videos. So instead, I'm going to be making more videos sharing different tips like this, especially in my series about growing wealth. So stay tuned for that. There's a part 2 coming out pretty soon. And thank you so much for watching. Please give this video a like. It would mean the world to me if you just like this video. I would really appreciate it. Subscribe if you want to see more content like this. Thank you so much. If you have any feedback, comment down below. Anything you want to tell me, please tell me. I would really appreciate it. That's it. Have an incredible day.